Welcome to Yellow Tunnel and Trade Spoon. My name is Carpel. I'm CEO and founder of both companies. So today we're going to have a live trading room broadcast where we talk about current market conditions. I want to say a special thank you to Tradier Hub, where we are also broadcasting live for this opportunity. And let's start. Lalit, welcome. Cecile, cool. Patrick, Peter, Michael, John, Steve, thank you. Tradier Hub, welcome. All right, we're going to talk about Goldman Sachs market conditions, right? One of the topics is, do you buy value stocks like Goldman Sachs and General Electric, or do you pursue NVIDIA and maybe Eli Lilly? So that's the topic for today. We're going to go through some latest earnings strategies. For those of you who are new, welcome. One of the main difference, I think, between our services and maybe some other services is that we're heavily invested in artificial intelligence and neural networks. We have a team of financial engineers that have PhDs in physics and economics, and we're constantly building new models, enhancing models to provide valid signals to trade. And in addition to these signals, I personally use these signals to trade every day. So that's a little bit about me. Disclosures are very important. We're going to go to specific trade ideas and trade setups. So please read the disclosures if you need to trade stock or options. I encourage you to visit optionsclearing.com so you can understand the risk associated with trading stock or options. And you can always pause the screen if you need more time to read the disclosures. All right, let's take a look at the market since this morning. You do see heavy kind of a large volume reversals, right? We talk about gamma squeeze and positioning, right? Let's turn our attention to our friends at Tradier. We did this morning, right? So you look at the stock like Micron or NVIDIA, and the idea is that you have to look at the gamma, right? And you have to look at the exposure in the market. If you see that the dealers are long gamma, right, and the stock is approaching a strike price where there's a high open interest, right? Like right now we see Micron, we have a heavy interest in 160 call, right, and 200 call, right? So let's see, what was the Micron high today? Micron high was 157. So 157 is the high. As you approach in 157, right, and the largest interest happened to be 160, right? Dealers have to make a decision, right? They want to be delta neutral, right? So depending on whether they're long gamma or short gamma, they have to either sell the stock or defend their position. And you can, in these examples, right, when volatility imbalance, right, the weighted vol skew is less than 0.5, there's a heavy demand for calls, right? Heavy demand for calls. And sometimes it can act as a repellent, or sometimes it can act as a magnet based on whether the dealer is long the gamma or short the gamma. In this example, they're clearly long the gamma, right? And this is where you have gamma squeeze, right? Because they have to defend their positions and they have to be delta neutral. They have to unload the stock. So this is the perfect example where we reach 160 and you have kind of the opposite price action in Micron. I think, let's see, Broadcom. And our favorite NVIDIA, right? So one day doesn't set the trend, but above average volume, especially before the open, when NVIDIA was up 3% and now it's down 3%, and it's across all mega cap technology, even Apple. That means gamma squeeze. Now you're dealing with dealers, right? And dealers have large position, and that's where the concept of gamma squeeze comes from, or Vanna charm flows. Right, so you have to be careful. Does it mean it's the end of the bull market? No. Does it mean we're probably in some kind of a short-term pullback? Yes. The goal for today to talk about Goldman Sachs, right? We're here. That was kind of one of the topics. But Goldman Sachs is up, right? NVIDIA is down. Goldman Sachs is actually still positive despite that. Where's the spiders? Despite spiders being down, semiconductors being down, and technology is down. So it looks like a rotation, right? From the value stock to technology. Technology led the market in the past couple of weeks. And now people are selling off Micron, NVIDIA, and Broadcom, and they are buying Goldman Sachs, right? Goldman Sachs and maybe a little bit of General Electric, right? After they were down significantly. So that is the trade, right? As of right now, I think I'm personally bullish, right? Today's discussion was Goldman Sachs. I think just in general, right? If you turn on your Twitter handle, you can see people are talking about that up to this point, the trade was the momentum trade, right? The momentum trade is your NVIDIA's and Micron and LA Lilly. But equal weighted ETF, RSP equal weighted ETF, hasn't really done anything since March, right? If you look at February 29 and you look today, right, or March 1st, it's basically flat, right? The equal weighted S&P is flat. If you look at my favorite VTV, Vanguard equivalent, a little bit better, but still underperforming. If you look at classical Dow Jones, then also underperforming. So you have this rotation from value stocks into growth, from growth back to value. That's the trade from today, but it's still a pattern of higher highs and higher lows. If you look at the stock forecast toolbox, right, one of our main models, we did talk about, hello Lalit again. We did talk about that for 10 days, there's a strong move to the upside, strong uptrend in the market to the upside. Let's see while it loads. So still strong momentum to the upside in terms of next 10 days. But if you look at the 6 months prediction, right? If you look at the 6 months prediction, model basically predicted that we're going to be at 550 level in September, August. But we are at 550 already in June. So a little bit too fast. So I think market is going to need to at least consolidate a little bit. I still think it's a pattern of higher highs and higher lows. One day doesn't set the trend, I would be a buyer into pullbacks, right? I would wait till at least semiconductors, see if this is, how big is the reversal. But for now, I would just kind of observe. 10-year yield is lower. It's reached this important 420 level. This has been either overhead resistance or support for many months since the beginning of the year. Since April, right, sharp pullback on better than expected inflation data, a pattern of lower highs, lower lows. That's bullish for the market, right? So that's bullish for the market. Yield today kind of in the middle of the range, but still sitting. I would watch the 420 level, because if the 420 breaks down, we can quickly visit 2024 low 3.8, and that would be a head scratcher. Then people are going to talk about, well, in the beginning of the year, we were thinking about 6 rate cuts because inflation is going down. Now we are 6 months later, we only expect 1 rate cut. Why are interest rates dropping precipitously, right? And the answer could be, macroeconomic conditions, right? Unemployment data, initial claims came in worse than expected, right? They're trending to this 250,000, which is considered to be kind of a line in the sand between healthy employment market and maybe not healthy, right? So initial job claims went higher, and housing starts and permits continue to deteriorate, right? Trending lower, and you can see home builders are also have been under pressure. And this is a big part of the economy. It's not just semiconductors, but home builders have been underperforming below 50-day moving average. That's usually a good proxy for how well the economy is doing. And now we have, transportation sector, which is another important part of the gauge of economic activity. And that has been also, if I can find it, also been deteriorating, right? 200-day moving average below 50-day moving average. So today's trade is rotation, right? People are buying beat up technology names, beat up, transportation, or, the banks, Goldman Sachs. And they are selling the winners, the Apple and NVIDIAs of the world, and I think even LA Lilly also down. Let's see. Yeah, even LA Lilly went down, kind of also reversing. So people are rotating out of their winners, the growth momentum names, into more conservative value names, which is healthy rotation. That means that there's no panic in the market. VIX is stable. It's up today, but still pretty complacent. Any questions? In terms of Goldman Sachs, So I would be, we talked about banks, right? Bob said, is it time to buy banks? I think so, right? This is 2 standard deviation move to the downside, below 50-day moving average, 3 days in a row with pattern of higher highs, higher lows. It's a healthy rotation. You have a clearly defined April lows. It's probably going to stay and hold, and potentially revisiting, all-time highs not that far away. So your JP Morgans of the world, right? They're doing better, and your banks of America of the world are also doing better. So that's macro and microeconomic conditions. In terms of trades from today, let's review them. If anything else got filled. Silver. So silver, strong move in silver. We're actually getting close. We're already up. Maybe even trim this position. Let's look at the position in silver. Let's see. StreamYard looks good. Matt, I think it looks good. Sharing, okay. They're losing. Great. Okay. So this morning I did buy silver. I said this is a time to start buying silver, and silver is trading at 28.04. So it's up 35 cents, 1% in short period of time. Maybe trim half of the position. I would say trim half. 28.02. Take profits. 1% in 1 day. Usually I would consider trimming position a little bit and then sell the other shares at 28. Let's see where the next level in silver. So probably at least 28.50. Let's put 28.50. A little bit less, 41. 28.41 would be second half. I would still be long silver. I think eventually it will break through this. It's a healthy consolidation, but I think the breakout is coming. But let's see what dealers are thinking about. Let's look at our friends at Tradier into their active platform, right? Active platform for active traders, where you can see dealer exposure, gamma exposure, and other very useful information. Again, it looks like NVIDIA, right? There's a very large spikes at 30, very large spikes 32, 34, 36. We've seen that. Sometimes we have 80,000 VANA, right, in one contract size. Now it's a little bit more spread out. People not as optimistic, but still you can see that the fixed strike vol skew is geared toward aggressive call buying, right? Kind of, it looks like a GameStop stock. So a lot of people think that we will break through the 30 level. Okay. Obviously, it's not a one-way trade. We've seen these sharp pullbacks of 10%, but people are optimistic. And dealers have to defend their position as we approach in the 30 strike. Dealers have to scratch their heads and figure out, well, what do I do? Right? How do I defend it? Right? And based on the skew, and based if they're short gamma, they are forced to buy the stock as we approach in the 30. That's why you see these large moves. Once it approaches 30, it could rebound, right? It could be repellent, but on the way to 30, dealers have large positions and they want to be delta neutral. And if they're short the gamma, then they have to buy the stock. Any questions? Beginning the market pullback. I mean, the question is at the beginning of the market pullback. There's always a pullback, right? The question, more important question, how deep is the pullback, right? How far can it pull back? I think pullback is healthy because it gives you opportunity to buy, right? We talked about, is Bob back? Howard, welcome. Where's Fred and Bob? Okay. But we talked with Bob today. He said, what did you say it was an overhead resistance? And I said that for spiders, it was 450 because we're approaching June expiration, right? Remember, there is a VIX monthly expiration that creates more volatility in the market, and there is a monthly expiration. So this June 21 position was a very high position at 550 that basically is served as an overhead resistance because the dealers are forced to sell stock. So we have this pullback. Today is Thursday. Friday, these options will expire worthless. Well, they're not ordered, they will expire. Maybe worthless, maybe not. But they're going to expire, they're going to be taken out. So the next week, you don't have, this is not a big position for spiders, right? One of the most liquid names. But if you look at June, July, and you look at the August, there is some positioning, right? There's some positioning at 560. So the door to the after the expiration tomorrow, the door is open to reach 560 without a lot of positioning. So it could continue to rally. But more important, to the downside, 530. 530 is very well positioned. Very well positioned. That's going to be probably 50-day moving average. This is the breakout. This is basically all eyes are on this level, right? 5. Let me adjust my retracements. So 530, right? So there's a big position at 530. This is a breakout, right? The May breakout. We're 3 weeks in a row, we're heading higher. So personally, I don't think we're gonna break through the 530 level, right? Unless there's geopolitical risks, right? We do have geopolitical risk, but 530 seems to be very well positioned. That will be close to 50-day moving average. Somewhere between 520 and 530, you have a huge buffer zone, right? Where I would say bulls are not gonna give this up easily, right? Especially with stronger than expected earnings, especially that we are heading into the next earnings season, right? Which is going to start basically in July 4th week, and everybody's in a good mood. So in a couple of weeks, 3 weeks, we're going to have earnings. I think this is a very strong support, and that is maybe or maybe not that this is the beginning of the correction, but I think this is an opportunity to add if we do reach 530, 520. As of right now, I don't see any resistance before 530. So it's an open door, open invitation for the stock market to drop 3% or to rally 3%. If we do drop to 530 or 520, I think bulls will step in because there's a very large positioning in these expiration months. But, the Nvidias of the world and Microns of the world, maybe it's a beginning of multi-weeks or maybe even multi-months consolidation, right? We had the same reversal back in March, if you remember, much bigger volume. Granted, we're in the summer and everybody's at the pool or playing golf, so the situation is a little bit different. We are trading above average volume, but nothing like in March, but similar price action, right? Big move to the upside, 10% to the upside, but at the end of the day, 10% to the downside, and then for the next few months, consolidation. So this could be the beginning of multi-month consolidation until the next earnings season starts, in a few, and for, I think, Taiwan Semiconductor is going to start the earnings season, which is probably 4 weeks away, right, if I have to guess, right? So Taiwan Semiconductor announcing earnings July 18th. So we're 4 weeks away. We could have 4 weeks of consolidation, and then the next earnings season starts. Obviously, one risk to this theory is that Japanese yen continues to fall off the cliff. Euro is falling off the cliff on geopolitical risk, right? The yields in Germany and France are expanding. So I think if Macron in France does lose presidential elections, and the bonds continue to deteriorate, right, demanding much higher yield. I mean, not 2010 scenario, but something where it's more meaningful pullback than just 3%, right? So I would watch, personally, I am watching high yield, right? High yield. Right now it's flat above 50-day moving average. There's no distress in the junk bonds, right? You do see distress in the yield in Europe, and at some point it could carry over into United States. But I would watch May lows and definitely April lows. For now, market is stable. So it's kind of a little bit longer version of an answer that maybe, but that's my opinion on the market, Peter. Thank you. I don't know if anybody did the earnings strategy, right? But I did trade home builders, right? We also saw positioning in home builders, and I did say that it, unlike silver, home builders look the opposite, right? Very well hedged, a lot more put buying activities because people are concerned with high interest rates in the economy. So you see, instead of a sharp out of the money demand for call buying, right? You have sharp out of the puts demand for put buying, and that usually works, and no sell call selling. So any positive news, and this works well, where the stock is maybe not going to be driven by gamma squeeze, but it's well hedged. And you can see home builders up 3%, but nowhere was that 2 standard deviation move that we talked about it. So if you did the trade, if you sold 75.80 call, this would be maybe a time to close that short call or wait till tomorrow. It should expire worthless. Any questions on home builders and KBH in specific? Yeah, it's trading at 5 cents. Questions? All right, so these are the home builders. Another ACN, right? So AI theme is alive and well, right? Even stocks like Accenture, right? Or Hewlett Packard, you would never think that these are AI stocks, but apparently they are, right? Because they also have, exposure to AI, right? They're selling these, smart glasses where you can drag and drop, and they do have a lot of consultant business where everybody needs help with how to set up AI, how to set up these models, how to feed the data, how to build the models. It's all new frontier for everybody. And Accenture is up, more than 2 standard deviation moves, right? You get punished if you don't deliver, or like last quarter, but this quarter, if you do deliver, then you do have a kind of the opposite price action. We've seen that in Oracle, right? Same setup, right? Punished, and then 2 rallies, and we also have seen it with CRM, right? Strong moves to the upside on earnings, and then strong moves to the downside on earnings. So AI theme is well. Unemployment is still healthy, so I think the bull market continues, but do expect volatility. Any questions? All right, let's review the rest of the position. So we talked about Accenture today, DRI, right? This is a restaurant. There's no artificial intelligence in DRI, but it's up 2%. So people are consuming, people are shopping. You can see TJX is another very strong stock that's up today, despite the market pullback. And what was my cost basis? Let's look at TJX. So I did trim the position in 110.25. I did get out of the spread, right? I bought it 110.25. I trimmed it at 110. 65, and it's basically close to the exit price, 111.10. That would be what? Roughly $1, so close to 1% gain. Close to 1% gain. So we are approaching. Oh, this is delay. Still long TJX, close half of the position, and I have the remaining half of the position left. So TJX, similar price action. Casco is very strong, and Eli Lilly, right? Some of the stocks that are still trading higher. All right, let's review the rest of the positions and see if we want to make any adjustments. So we talked about ACM today. We talked about DRI today. What else? Who else get earnings today? And Kroger, right? Kroger had earnings today. And JBL. So Kroger, very volatile, right? Up 4% pre-market, down 3% now. Around Kroger. So pretty volatile, but you have a sharp reversal to the downside. So that's Kroger, and then JBL. Two standard deviation move, right? Very volatile. You get punished, down 12% on above average volume. Okay. Any questions on the earnings? We don't have any earnings. Usually I do earnings for tomorrow, but there's no earnings for tomorrow. So we will not do earnings today. And we review the previous earnings. All right. So in terms of positions, so I'm long Goldman Sachs, right? Looks like it's outperforming. I just continue to do dollar cost average. I'm long General Electric. Bought it today. Let's see how's General Electric doing. Flat, but it's again rotation to the value stocks. So adding to the value stocks, China. So you do have a strong rebound in China, at least as of this morning. Let's see if it held maybe in the middle of the range, but still looks like this 26 level held, right? It's building the bottom. It's holding 50-day moving average. You have moved to the upside in China. Silver is usually highly correlated trade, right? And silver is up 4% today. So I did trim silver position as well. So going back to today. Trimmed silver position, right? Sorry, I bought silver. Right, I bought silver, trimmed it, right? And I also bought China. 26.90 because I think there's more room to the upside in China as well. Microsoft HPQ. I did trim HPQ position as well. Right, so HPQ, I trimmed it this morning, 37.10, was able to capture. Or what did I capture? Then close to 1%. So it's what is it? 24.34. Yeah, so close to 1% gain, and now I'm looking for another, maybe another 1.5% gain. So still on HPQ, have a small exposure in HPQ. Microsoft, the spread, I closed the stock. I bought the option that expires in August. I mean, obviously it's pulling back together with the market. I mean, you have a clearly defined support resistance, right? I don't really have to guess where, and ideally I want to be down less than 1% of my portfolio if we do drop to 433, 435, because I think that would be an opportunity to add to Microsoft. And let's see what our friends at Tradier say about dealer positioning in Microsoft. Is there overhead resistance, and do dealers have to sell? 460. So the doors are kind of wide open up until 460. Up until 460, pretty well hedged 420. 420. So 50-day moving average is held, 433 is not. So, you could be more conservative. You can say, okay, Vlad, I don't want to risk more than 1% if it drops to 50-day moving average. That's totally fine. Or you can say at 433, I want to risk 1%, and then I make a decision. If I see 433 hold, maybe I add. But that would be my thought process on Microsoft. NVO, we talked about LA Lilly and NVO, continue the uptrend. Talked about large move in silver. I'm still long silver. TJX is outperforming along with Costco and Walmart. And Texas Instrument July spread, 190, 195. That is, I'm a little bit nervous because it's a spread. And unlike stock, with options, you have to be correct not only in direction, but also on timing and also on magnitude of the move. Strong move after the earnings, participating together with the market. It's not down. It's also reversed. I think it was up 2% pre-market. It has reversed. It's not making new lows. You do have the supported 50-day moving average, but I only have 4 weeks. So, at this point, usually the way I look at it is the stop loss, you either risk the premium of the spread, or most common is 50%. So I bought this spread for $3.50. It trades at $2.70. I'm down 70 cents right now. So I'm down 20%. If I'm going to be down 50%, then I would consider exiting the position, right? Because it might rebound, it might not, but clock is ticking, and I only have 4 weeks. You might have a rally into earnings season, right? Usually you have these pullbacks, and then as people start thinking about earnings, and that the AI is here and unemployment is still healthy, then people are going to get bullish. But I encourage you to stay disciplined. And if you're down, if the spread is down 50% and you're down 2.5%, I would exit. If the spread is down 50%, you're down 1% or less, you might want to look at the support resistance and see how well it supported, right? Or looked, if there's a lot of put buying. Let's see if there are a lot of put buying at those levels as well. July 19th, August 16th. So a lot of call selling, right? Buying and calling. So people are selling and buying large volumes of out of the money calls. They are selling 187 strike, right? But not a lot of hedges. So that's problematic for Texas Instrument, right? It's not the most liquid name, and right now people are not hedged when it comes to Texas Instrument, or at least not enough. Any questions on the positions? Any questions on stock? NVIDIA is still down 2%. Apple reversed down 2.5%. Let's look at some of the other things that I usually follow. Well, GameStop is up 3%. That's a great news. Tempus is down 10%. Meridian down. Firm down. So risk off, right? Risk off. JP Morgan. Meta is actually positive. Meta is not breaking. It hasn't done anything since February, but it's flat. Netflix is breaking out. So Netflix is very strong. Microsoft is very strong. I mean, they're pulling back, but these are stocks that are breaking out. Tesla is underperforming. Apple is outperforming. And Amazon is up 2%. So Amazon is bouncing for 50-day moving average. Okay, small caps are struggling with 200 level. So small caps and mid caps are struggling with the 50-day moving average. And, just in general, in terms of participation, in terms of how many stocks are above 50-day moving average or above 20-day moving average, you see these numbers are low, approaching April lows. So participation is not great. Any questions? Any questions from Tradier? Let's see, no questions from Tradier. Any questions on GoToWebinar platform, Discord? All right, if there are no questions, then that's all I have for today. Thank you very much. I appreciate your time. I will see you guys tomorrow. Thank you.
Thanks for watching. Please be sure to take some time to read the disclaimer. Thank you.